Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Today, in terms of the market, we're seeing a bit of an, red and green situation that keeps coming in. It's flip-flopping between the red and the green. That's what we're seeing for the Nifty. As of now, managing to hold on to gains of 0.2%. So there's no complaining on that front. We are seeing 25,770 levels. Day's highest point is what the Nifty now has moved on to. So that is what we'll keep an eye on. 50 points uptick is what we're watching out for. The Nifty 50. Broader end of the market, that's doing much better today. So Nifty mid-cap as well as a small cap. Outperformance coming in there. Nifty mid-cap up 0.6%. Small cap is up almost 0.8% in today's trading session. A lot of movers that are coming in from the broader end of the market as well. So that is something that we'll be keeping an eye out on. Sector-wise, Nifty Realty top sectoral gainer, while FMCG is among the top sectoral losers. So let's keep an eye out on that. But this is a show where we solve all your stock-related queries, and that is what we'll be doing. We have our experts joining with us, Ashish Kyal, a chartered market technician and author at Wave Strategy Advisors, as well as Gaurang, Shah, Senior Vice President at Geojit Investments, to answer all those queries. Ashish as well as Gaurang, good afternoon, happy Monday, and thank you so much as always for joining us on the show. Let's get started with those stock-related queries now. And the first query for today is coming from Jay Rathod. It is on Bajaj Housing Finance. He's holding 350 shares of Bajaj Housing Finance at a price of 119 rupees. Currently, the stock is trading at around 109, 110 rupees per share. He's saying that if he continues to hold this for the next 2 to 3 months, what is the investment strategy that he should keep an eye out on? Gaurang, good afternoon, and what is your view here?
Thank you, Vinny. Good afternoon to you as well, and happy Monday to you as well. However, the markets are in a range-bound mode since the time we open up for the trade. Having said that, a small disclosure before I go any further, that all recommendations are a part of our research team recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest either. But we give recommendations to our clients on similar lines. They might have their investment interest. Now, talking about this particular sector, first of all, that is HFC, housing finance companies. So, Vinny, we are in a trajectory of lower interest rates. We have had close to about 1% rate cut this year, if I'm not mistaken, by the Reserve Bank of India. Expectation of further rate cuts coming through, which will translate into positivity for finance companies as much as for housing finance companies. Real estate sector is doing extremely well. Positivities of real estate sector doing well also comes on to the housing finance companies. This Bajaj Housing Finance, of course, it comes from a great pedigree. We don't have any specific coverage on Bajaj Housing Finance, but we are positive on the sector. We like names like LIC Housing Finance and Canfin Homes. And, for 2-3 months, it's very difficult for a fundamental view to be given out. I think my good friend Ashish Kyal would be in a better position.
Absolutely. Ashish, then on the technicals, what are you watching out for? Because 2-3 months time period, right now they're making a bit of a loss. Will they be able to go above their buy price of 119 in the 2-3 month time period?
Hi, Vinny. Afternoon to you and Gaurangji and all the viewers. If you look at Bajaj Housing Finance, it has been consolidating forming a triangle pattern between 113 levels and support at around 107. It's forming a range-bound movement, and I think it's better to wait and hold on over here, because if the stock manages to break above that 112, 113, it can go par 120 as well. So my suggestion would be, from short-term 2 months perspective, hold on to the stock for the targets of 120 or higher. And on the downside, maintain a strict stop loss of around 106 levels. If that is broken, then we might see some kind of a downside move.
Okay, keep an eye out on those levels over there. Let's move on to the next query. This is coming from Mala, who's writing to us from Mumbai. She's holding 600 shares of Praj Industries. Price is 338 rupees per share. So right now the stock is trading near the buy price itself. Wants to know if she wants to hold the stock only for 1 month. Then should she hold, or maybe should she look to switch to some other name? Gaurang, your view, Praj Industries, and again a very short-term query.
Honestly, this company used to do well. We used to have a coverage, Vinny, as a matter of fact. But after our target price were in place, we have removed the coverage. Currently, we don't have coverage. And this is more of an ethanol story, which was blending over a period of time when the government's, inclination towards blending a higher amount of ethanol with petrol and diesel. But that doesn't seem to have worked out well. Over the last 6 months, 1 year, if you actually go to see, this has been an underperformer. If she's also inquired about whether she can switch on to some other sector. So no specific comment on Praj Industries, but I think if she's planning to make a switch, the entire BFSI segment has done extremely well, leading with the public sector banks, private sector banks, and strong NBFCs. Now, if I have to identify one particular name in the NBFC, then I think closer to where the stock prices of Praj and the recommendation, I think L&T Finance from a long-term point of view would turn out to be a better investment idea.
Okay, another investment idea coming in, maybe to switch out is the option that Gaurang is saying. But on the technicals, Ashish, 1 month time period, where do you think the stock is headed and what should the viewer do?
See, if you look at the stock performance over the period of 6 months, 1 year, it has sharply moved down from 540 levels, made a low around 330, and now just consolidating there. It's also failing to move above its 20 DMA. So the overall tone for the stock is on the downside. So my suggestion would be it's better to be out from Praj Industries and invest in something like an auto. Auto is also outperforming along with interest-sensitive stocks that Gaurangji mentioned. So something like on the auto side, two-wheeler stocks like Bajaj Auto looks to be doing good. So diversify from here, exit from Praj and invest into other stocks.
Okay, that's a view there from for Praj Industries. Better to move out. That's the view coming in from both our experts for today. Let's move on to the next query. We have Ambali Matthew, who's writing to us from Kerala. She's holding 4,500 shares of Varun Beverages. Price is 530 rupees per share. She's been holding the shares for a year now. So it's been 1 year. She's continuing and she's willing to actually hold it for another couple of years as well. She's a long-term investor. So what is the view coming in on this one, Gaurang? What should she now be doing with Varun Beverages? We had the numbers also that came in for the company. What should we keep an eye out on?
So on fallback of the number, there was also a positive announcement wherein the company is planning to go into an Alco-Bev beverages. I believe it was with Carlsberg. I stand to be corrected if I'm wrong, Vinny. And in terms of performance, yes, there was a concern in the quarter gone by. That was the first quarter of this financial year. But looking at the current numbers, Q2 and the management commentary venturing into newer trajectories and products getting launched, we have a whole recommendation. From a long-term point of view, approximate targets possibly in excess of 550 is what we have in our mind. So long-term, continue to hold.
Okay, long-term, continue to hold. That's the word on the fundamentals. Technically, Varun Beverages, how is it looking, Ashish?
See, the stock has formed a very classical double bottom pattern. It managed to bounce back 2 days or 3 days back. We saw a huge uptick in the stock with enormous volumes. And that was a positive sign, but it has given away half of its gain. So right now, my suggestion would be hold on over here. On the downside, maintain the stop loss of around 443 levels. And on the upside, the stock can again move to the higher end of the range, which is near 560.
Okay, keep an eye out on those levels over there for Varun Beverages. Hold on right now is the suggestion there. Let's move on to the next query for today. We have Skandha R, I beg your pardon, Skandha R, who's writing to us from New Delhi. He is holding 950 shares of Eternal. Price is 346 rupees per share. Long-term story for this one. Gaurang?
Well, definitely a hold over here, honestly. And I think earlier known as Zomato, I guess most of us would be having the app in our smartphones, and we would definitely using that. Fast forward to the current situation and the outlook going forward from here on. There are a lot of dark stores that Eternal has opened up, and they have ventured into newer geographies. That by default increases the footprint market share, along with that increase in the subscriber base. Coming next year, 2026, Vinny, they have a lot more detailed lineup in terms of newer stores, newer geographies they will be stepping into. Definitely. And we have covered this particular stock earlier known as Zomato when the IPO was there. 76 rupees was the IPO, if I'm not mistaken. And then post that, we maintained a fundamental buy call on Eternal for a long-term point of view. So if you are in for long-term, continue to hold.
If you're in for the long term, continue to hold Eternal. That's the word there. But on the technical front, Ashish, what should one be doing? In the last 6 months, the stock has gone up 35% approximately. Should the viewer continue to hold?
Yes, indeed, because the stock has strongly outperformed its peer. If you look at Swiggy, Eternal has outperformed. And we can clearly see that there is a short-term correction which happened, and it can be a good level to add more at these levels. And on the upside, we can expect the stock to move towards the level of around 400. So the overall undertone for from the weekly, monthly, and the short-term perspective for Zomato is or Eternal is positive. On the downside, the support is going to be around 300 levels.
Okay, keep an eye out on those levels over there for Eternal. But quick check in terms of Stovekraft. They reported their numbers, and the stock has seen a sharp spike up. Right now, you can see it at the bottom of your screens. Net profit is up around 27.5%. 21 crores is what the net profit has come in, and revenue growth of around 13-14% there. Margins have seen some bit of an improvement as well. So that is what maybe is keeping the stock abuzz. We'll wait out for more details coming in. Operationally, also a good performance, and Stovekraft has spiked up in today's trading session. Was trading in the red at some point of time and then moved up to the green. 12% is the EBITDA margin versus 11.7%, 30 basis point expansion in terms of margins. So keep an eye out on Stovekraft. As of now, holding on to gains of around 2% in the trading session. But on that note, we're going to slip into a very short break. But before we go into a break, here's a quick note for our viewers. You must have noticed that there's a Moneycontrol stock score just above the line graph. Now, like you can see for Stovekraft, there is a score that is there of 51. This is a score assigned to each stock based on Moneycontrol's multi-factor algorithms. It's calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and a T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out the necessary diligence on their own or through a registered certified financial advisor for investment decisions. Welcome back to your stocks in CNBC TV18. We had GE Vernova TND that reported its numbers as well. Profits have seen a significant uptick coming in at around 299 crores, revenue up 39%, EBITDA is up 94% as well, and a sharp improvement in terms of the margins is what we've seen coming in as well. So yes, overall a good set of numbers that's coming from the company because in terms of the revenue growth also, it's very strong and much above what we were expecting. Margins are much better than what we were expecting as well. So will be key in terms of commentary to watch out for from the management. As of now, the stock has moved to the day's highs point. 9% uptick is what we're seeing coming in for this cap good company as well. But keeping it going with all your stock related queries, and the next query for today is coming from Ria Matthew, who's writing to us from Kerala. She's holding 55 shares of M&M. This is at a price of 1,725 rupees per share. Wants to know if she should continue to hold, sell. What is the view coming in at the current levels? Gaurang, what is your view on this one? We had the October sales numbers that came in as well. So now what should they be doing with M&M? Should they book out their profits?
Not at all. If you're a long-term investor, and the best part about the investment, Winnie, is the price at which she's got invested. She's almost doubled her money, if I'm not mistaken, or a little bit higher side from here on. Fundamentally, we do have a buy recommendation on Mahindra Mahindra. I think, first of all, they have a diversified product profile, including the BE6 and the other variant. Along with that, of course, you've got various products available in the SUV, UV, and of course, commercial vehicles. Tractor agri equipments also contributes to some certain extent as far as M&M's balance sheet is concerned. Somewhere close to about 4,000 is the approximate target price. And one more thing I would like to add over here, that in case, because she's holding just 55 shares, in case if she has investable amount and if she's wanting to invest in M&M for a long-term point of view, she can definitely do that. Some at current levels and possibly add-on dips would be the strategy.
Okay, add-on dips maybe would be the strategy there. Ashish, what is your view coming in for M&M?
See, the entire auto space, auto ancillary, I think is just started the upward trend. And M&M has been a leader in this entire space. So I think there is a lot of outperformance that can come in even from here, these levels. And we can expect the stock to reach the levels of around 3,900 on the upside. On the downside, the important support is going to be around 3,350 levels.
Okay, keeping an eye out on those levels over there for M&M. Next query for today is coming from Ritesh Mathur, who's writing to us from Noida. He is holding 30 shares of Mphasis. Price is 1,997 rupees per share. right now they're making a profit on this one. Now he wants to know if he should continue, and is it worth holding Mphasis for a period of 3 years or more now from here on? Gaurang, your view for Mphasis and overall the IT pack as well.
So let me give you a brief view, try to give you a brief view. Well, the entire IT sector, Vinny, if you actually go to see, a lot of people had written down an obituary and advised to stay away. We at Geojit maintain that, yes, there are difficult times, but it's not like you can write off information technology from a long-term point of view. Point number one. Point number two, some of the small and mid-cap IT companies have actually delivered better numbers when you compare it with the larger boys, big boys like TCS, Infosys, Wipro, HCL Tech, etc. So we have an accumulate stance on Mphasis. Hold on to it, first of all. And if you have investable amount, you can definitely add on to it. We have a target of in excess of 1,300. Again, from a long-term point of view, if the earnings are better than what our estimates are, these targets would definitely get revised upwards.
Okay, that's there. But let's just address the flashes at the bottom of your screens quickly for Vodafone Idea. Vodafone Idea's move to Supreme Court says that there is an error in para 6 of the AGR order that's come in there. The Supreme Court clarifies that Vodafone Idea had asked for a relief on both additional AGR dues and reassessment of all AGR dues. So that is an important update that is coming here. Now, the relief against additional AGR dues had made composite payer against additional AGR plus reassessment of all AGR dues. So an important update there coming in for Vodafone Idea, where Supreme Court has clarified that Vodafone Idea had asked for the relief for both additional AGR dues as well as reassessment of all the AGR dues. So just keep an eye out on this one. And Ashmit had also, just given us more updates on this one as well. So that is something that we will be keeping an eye out on. This is there that there was an error in para 6, and Supreme Court says that we would had only asked for relief against additional AGR dues. Let's go across to Ashmit, who is here to give us more updates on this one. Ashmit, what is this latest update now that has come in?
Well, a hugely important clarification, hugely important for Vodafone Idea coming in from no less than the Supreme Court of the country. What's important is that, mind you, Vodafone Idea, in that original application that they had moved, had made a twofold plea for relief. Number one, they had sought relief against additional AGR dues, and number two, they had sought for reassessment of all the AGR dues. There were both these reliefs that were mentioned in their petition. However, in the latest order that had come out by the Apex Court, that order made a mention that Vodafone Idea is seeking relief only against AGRs, only against additional AGR dues. That Supreme Court order led to the impression that the hands of the DoT are being tied only, that they can grant relief only to the extent of additional AGR. That is the anomaly, that is the error which was flagged once again by Vodafone Idea before the Apex Court. They appeared before a bench headed by the CJI. They mentioned that there seems to be an error. The Supreme Court seems to have caused confusion, that Vodafone Idea is asking for relief only against additional AGR dues, and that is something that has now been reconciled by the highest court of the country. The Supreme Court saying that yes, we are now recording as a part of the order that the relief being asked for by Vodafone Idea is both additional AGR dues as well as reassessment of all the AGR dues. This stand was in fact also supported by the centre. The centre was present here before the Supreme Court. The centre stance also is that the government should be given flexibility to decide on any application for relief that may be filed by Vodafone Idea. So this effectively clears the decks, clears the hands of the DoT to go ahead and to consider any fresh application by Vodafone Idea for reassessment of all the AGR dues in question, not just additional AGR, but all the AGR dues in question.
Absolutely. A big clarification coming in there, so that certainty, both additional AGR dues as well as reassessment of all AGR dues. So an important update there. Thank you so much for joining in with us, Ashmit. And as of now, the stock has moved up. 7% up is what the stock is trading at. Look at the spike up, post this announcement that has come in, the clarification that has come in as well. Vodafone Idea, 7.6% uptick is what we're seeing coming in for the stock as of now. Okay, that's the word there. Thanks so much for that, Ashmit. But let's keep it going then with the next query. We have this one coming from Mihir Khanna, who's writing to us from Jaipur. He's holding 75 shares of Naveen Fluorine. Price is 5,003 rupees per share. He wants to know what should he be doing with this one. Ashish, your view for Naveen Fluorine?
See, over the past 2 days, we can clearly see the stock has shown a very sharp rally on the upside. It's trading currently at 5,900. The undertone is positive. My suggestion would be hold on to the stock here. Might be headed towards 6,400 or higher levels. On the downside, the low of yesterday, which is around 5,400, is going to be an important support.
Okay, that's the view there for Naveen Fluorine. And Gaurang, a quick word from you as well. Naveen Fluorine, should they continue to hold this?
Well, so it's a strong player in the sector, Vinny. We don't have any specific coverage, so I won't give specific buy, sell, and hold. But yes, the opportunity looks tremendous, not only in the domestic market, but also in the overseas market. And Naveen Fluorine happens to be a very, strong contender in terms of the products that they're offering.
Okay, that's a view coming in there. But that was the last query for today, gentlemen. So thank you so much, Ashish, as well as Gaurang, for joining us on the show and helping our viewers solve all their stock-related queries. And viewers, thank you so much for tuning in. Remember, you can always email us your queries. There'll be an email ID flashing at the top of your screens for you all. So do send us your queries. But keep an eye out on Vodafone Idea. More updates will keep coming in. But as of now, a big relief there. Don't go anywhere. Last hour of trade is still left. And closing bell is up next for that.